Welcome back. You're watching Business Morning on Channels Television. Let's keep the conversation going on Twitter. I'm at CTV Harriet. You can tweet at Bebos, and you can also look for the show's Twitter handle. I should have started with that first. So we're at Biz Morning. That's the show's handle, so you can send your comments, contributions on issues that we're talking about here on the program to at Biz Morning, or if you like, you can send it to our Channels TV, and we'll be glad to respond to them. You can also send us an email to businessmorning@channelstv.com if you can't find us on Twitter. So let's talk about the Nigeria energy market. And of course, at this time, we start our review of the energy market with a focus on the energy stocks that we track here on the program, oil and gas stocks on the program. That is, so starting from close of Friday, this is how the numbers actually shaped up. We have corn oil finishing the week at 35 naira 49 kobo, and with a volume of 50,844 exchanged by investors. Forte oil was unchanged, closing at 53 naira 87 kobo. Might I quickly point out that you have gray shoots on at least the top four that we're looking at. So corn oil, Forte oil, Mobil, and MRS unchanged for the week just ended, but you see the various volumes that were exchanged by investors. Let's take a look at the next page now, where you have Oando, Seplat, and Total. Now, Oando is up 1.04%. A little bit of a mix there with Seplat that had about that closed at 370 naira on Friday, while Total finished at 270 naira at the end of Friday's trade. So for the week just ended, this is how the index shaped up. So it's the weekly index that we're talking about. That came in minus 0.91%. Year to date is at 8.74. Price to earnings 23.8. And dividend yield is at 2.2%. But of course, that will likely change as more companies turn in their corporate earnings for 2016. What other issues are we tracking in the energy market? Now, international ratings agency Fitch has upgraded the long-term issuer default rating for Seven Energy Limited, a wholly owned indigenous oil and gas exploration and development company, to CC, reflecting very high risk levels. Fitch had in September 2016 downgraded the oil and gas company to B-, representing moderate risk levels. According to a statement by Fitch Ratings, the company's short-term liquidity remains extremely weak owing to accumulated accounts receivables for sold natural gas, a limited ability to convert naira into dollars, and the ongoing Forcados export pipeline closure, which happened since last year at this time. Now, the Infrastructure Concession Regulatory Commission is working with a new partnership for Africa's development, NEPAD, to make the proposed multi-billion-dollar Trans-Saharan gas pipeline project a reality. Now, Nigeria signed a treaty with Niger and Algeria in 2009 to build a 1,037-kilometer gas pipeline from Calabar to Kano to the Nigerian border. Now, from the Nigerian border, the pipeline would continue for about 841 kilometers to Algeria, and then 2,303 kilometers within the Algeria gas infrastructure pipeline. The proposed pipeline includes a 220-kilometer subsea between the border of Algeria and Spain. Well, the project put at an estimated cost of $3.4 billion is expected to be completed next year and will deliver about 510 million standard cubic feet per day and add about 2 gigawatts of power, including 2 compressor stations. That's for Nigeria. According to the ICRC, about $1.2 billion had been spent in the early gas phase to complete 261 kilometers pipeline from Kwaibo, Ikodabasi, Okanafon, Obigbo artery to connect gas supply to feed the Ajaokuta Kano line. And this was to deliver about 590 million standard cubic feet per day. So those are some of the stories we're tracking in the energy market. What else are we tracking in the energy market? The unending power sector challenges. That's one issue that has refused to go away, despite the various forums, discussions that have happened at various forums, where a lot of solutions and back and forth ideas on how best to solve this unending power problems still seems to be a very knotty issue to deal with. And so let's continue this conversation. I'm being joined by Omotola Abimbola, who is an investment analyst with AfriInvest. Omotola, good morning to you.
Good morning, Harriet.
So for you, why do you think this unending power sector problem continues?
Well, I think it is mostly a liquidity problem, and we can probably see that from the recent data from the MBS, which shows the level of payment by Gencos and Discos to the value chain. For the year 2016, Nigeria's Discos, they issued out an invoice of about 331 billion naira to the Discos. Meanwhile, the revenue remittance rate from the Discos to the Gencos was less than 27%. So that left a payment backlog of over 240 billion naira. And right now, the power sector has now moved to the precipice of collapse. And in fact, data from the NBES is showing that at the moment we have outstanding receivables of over 850 billion naira being owed, both to the Gencos and also to the gas suppliers. So it's a very acute liquidity problem that we are facing in the markets right now.
So what really do investors want in the power business? If you take a look at some of the issues that have been raised continuously, even AfriInvest, we've had this conversation, so many times. What really do investors want in the power business?
Investors want, number one, they want the problem in Niger Delta to be resolved because last year we had a number of generators